Okay, so good afternoon, and we're going to look at the dark side of the moon. What happens is when the market starts going down is when people start looking for short selling methods. Like I get because I have some post on the public blog about short selling and all, then and I start getting emails. And when I start getting emails, guess what? I know invariably, like when I start getting emails about shorting, is that it's time to go long, right? Because people want to go short when the market has started falling down and has been going down for some time. It just doesn't work that way, right? It just doesn't work. So if you are going to be developing a shorting as part of your setups which you trade, when is the time when you should be developing your shorting skill? Is when basically the market is going up, and you have to do shorting regularly every day, or you might take a smaller position, but if you have to be looking at it every day and doing it regularly, then when you find periods like this, then you can do it, right? And it's the same thing even if you're going to be day trading and you're looking at weak structure chart. Okay, you have to do it like daily to instantly recognize this is weak structure or this is weak structure, or can I say a bunch of them. Basically there's no shortage of weak structure charts today. Twitter, Snap, even Snap, here weak structure. Okay, or even Google for that matter, right? And it's and it just right from word go, went going down and kept going down. So if you want to look at the short side of the equation, you need to look at the other problem is the other thing is whenever you decide to short, obviously shorts work when the market is going down, right? But if you are really looking for a shorting method, then or you want to develop shorting setups, the setups which you need to develop for shorting has to be such that they work in all market conditions, right? Because if they only work during the shorting period when the market is going down, obviously you don't have enough experience of doing that, because the market hardly goes down most of the time, right? Even when the market went down here, in terms of market going down, SPY, right? That was only for less than how many days was that? That was less than 22 bars, right? So you can't be really in that 22 bars, when will you learn and when will you short and when will you make money? So you have to be all the time looking at it. So initial years I wasn't really paying attention to shorts at all, but and I started spending some time and looking through this. So uh, from my point of view now, for our and if I want to wear the shorting hat, okay, which will be difficult to put it. Okay, so if I want to wear shorting hat, okay, then You need to have setups which work during all the time periods, right? So it's difficult to get it out. Okay. So for that, Mr. Basically, there are two setups which work all the time, irrespective of what the market conditions are. Market can be going up like crazy, and these setups are going to work irrespective of the market condition. And what are those two setups? Primarily two shorting setups. One is strong structure. Okay. And another is, and these setups, the beauty of these setups is that they work in any market conditions. Obviously, they work when the market is going up also, and they work when the market is going down. They work even if the market is just going sideways. So strong structure and weak structure, two shorts. Okay, what is a strong structure short? Strong structure short is a short on a stock which is going up very rapidly. Okay, here. This is an example of a strong structure short. It was making crazy moves, and when it went down, now it has been down 16%, 17%, right? And a very strong stock, right? Another example which uh, we looked at a couple of days ago, here stock was very strong, right? And the stock had made this big move of like basically 235%. So typically, whenever you're looking for these kind of charts, strong structure, try and look for something which has doubled, okay, in say 2 months or less. And the more it goes up, the more better it becomes as a short, because something which goes up crazy, like in this particular case, in a manner of in a span of like 43 bars, which is 2 months, the stock was up around 237%. And that's the stock which, when it breaks many hearts, right? So anything which is very, very strong uh, is likely to break. And where are you going to find these stocks which are extremely strong? You'll find them in top 25, ideally most of the time. Like anything which makes it to the top 25 can be a good shot, right? So stocks which have extremely high momentum, whenever you look at like in a momentum, especially on the shorter time frames, okay, what you're likely to look at is a stock which is going to make a good shorting candidate, right? So whenever there is a crazy kind of a move which happens, that stock sooner or later is likely to be the one which will go down. And this you'll see invariably, strong stocks become weak stocks, right? And I say, let's say, like, and if you look at, say, let's say, uh, let's try and create 2 months indicator. Like, see, this is TI42, but that's like in a 2 months currently, right? And that's almost like 2 months, but like, and you don't need that. Okay, I'm just showing it. So just for purpose, or like, let's look at MDT 25 itself, which tells you that which stock was the strongest 6 months ago, on 6 months momentum a month ago. So in this case, SPI was the strongest stock. What happened to that stock after that? It collapsed and 70%, right? And like from the high, almost like almost 70-80%, right? Almost every time you get these kind of crazy moves where the stock makes a crazy amount of move in 2 to 3 months, okay, if this was 1000%, so what is going to happen after the 1000%? Okay, here, so the strongest stock make best shots, and the more they go up, the more likely you're going to go, like basically find them to be very attractive charts. Like some of the stocks, like say this VVPR, okay, so in just 2 months the stock was up almost 640%, right? What happened after that is 60%, it is down, right? I was just talking sometime like today to somebody who's holding what is that gaming stock which is like was favorite few months ago, DropKing. Okay. And he's still holding and he's asking me what should I do, and I said, like, you look, and when a stock makes a crazy move in a short period of time, okay, and that stock from the low almost made like an almost 400 500% move, that's not when you buy it. uh, that's when it becomes a good shot, right? And basically, and after that, like, and it's just been persistent selling, right? And you can look at everything which is like, and if you look at even space for that matter, right? And the stock after parabolic moves like this, anything which makes that kind of 394.40 in like in a less than 3 months is 75% it was down, right? And this is something which you need to, if you want to develop shorting as a strategy or as a setup, then what do you need to develop? What do you need to do in order to become good at it and have a conviction in this setup? What will you need to do? Is you need to wear your like basically red hat and do a deep dive. Okay, do a deep dive. Look at every stock which was like basically up a lot. Something which goes up like crazy, like 300% plus in a quarter, in one quarter. If something has gone up 300% plus, see what happens after that. See what happens after that. What do you think is going to happen to this stock? What do you think is likely to happen to this stock sometime in near future? Yeah, it will collapse and it will like and it will go down, right? And basically stock has made like some 1600 1700%, 2000% move. uh, Things which make crazy moves, okay, in a short period of time, especially 100% plus in 1 month or less, they go down, they go down, okay. And that's the nature of the market. Workhorse, no matter how attractive the story is, and this is what exactly I was telling that person on email, saying, look, and he says, but like I'm convinced that like this is going to be the big wave of future like online betting. I said, yeah, it's like I'm also convinced, but like that conviction doesn't have to. There is a difference between that conviction and having a setup, right? Does it mean that it is a setup, right? And from that crazy moves, the stock is down almost 33 34%. So if you want to find stocks which are going to be good shorts, okay, what you need to do is basically you just need to basically find the strongest stocks in the market, and the strongest stocks in the market are here, right? The strongest stocks. Obviously, then after you find a strongest stock, you need to short them on some sort of a breakdown or a setup kind of a thing. Don't short them like in this kind of a stock. This is an ideal candidate for a short, right? But because the stock has gone up like 101%, but when do you short it? You wait for some confirmation. You wait for like basically some sort of, if there was an this thing. The other thing which I will tell you, if you want to get into shorting, okay, can you make money shorting biotech? There's a lot of money in shorting biotech, okay, because most of them eventually collapse, right? But the problem is the risk involved. of like say something like this. I don't know what is the story here. You shot something like this here, and on Monday some story comes out. Look, and whatever, I'm not even sure what this particular company does, but like say it has some drug or like something, and then the trial, then it might open at $40, and you'll be like basically be wiped out. Okay, so uh, I have decided for my own trading that I'm not going to short biotechnology stocks unless it is a biotechnology stock which is not a this developmental stage kind of a, but it's a real biotech. In the sense, real biotech means like something like BIB or Amgen or something which has already has a lot of revenue, established biotech kind of a thing. Otherwise, like, and if you're looking at story stocks, which 100% of the time most of this developmental stage biotechnology stocks are story stocks. Okay, uh, it's too much risk in terms of doing this. So most of the time whenever you're going to get a parabolic moves which are crazy, what tends to happen is those tend to resolve into going down. And especially when you have like an basically story stocks, the ideal situation within strong structure is basically the most ideal situation in strong structure is that you have a story stock. And I hope you know what story stock is, right? Because we looked at that somewhere. Where do we look at story stocks?
9 million.
9 million, right? So if you have a story stock, right, and then it makes a 200 or 300% kind of a move, or some obscene move like that, uh, in less than 1 quarter, what is going to happen after that? That stock is going to collapse. Okay, and it is going to go down. It is going to offer you a very good opportunity to make money. So always, uh, a stock which has story, and it is completely a story kind of a stock, and it makes crazy kind of move, and it goes up like crazy. Okay, versus a stock which has like real earnings or something like that, it might be a different story, right? But when you have really a crazy amount of moves happening in a stock based on a story, examples of story stocks will be like space SPC. This is a 100% currently story stock, right? And it means like it's a complete 100% story, right? And unfortunately that whatever reason the market smith is today crashing, it's so I'm not using market smith, but if you look at zero revenue, zero profit, in fact, and it's making losses, right? Or for that matter, that NKLA, what was that stock all about? What was this? This was all 100% story stock, right? And see what happened after that. The stock is down 80%, right? So anything which is 100% story stock is something which is going to just collapse. Okay, and that has here is the beauty of this. Okay, and this happens all the time when the market is also bullish. Like, you get like these story stocks making big moves, and they collapse. But you don't have to wait for the market to turn for these markets, these stocks to collapse. They collapse. They collapse because once the last fool has bought, uh, there are no more buyers, right? And then the whole thing collapses. So this happens every year. This happens every month, right? Something just like catches markets fancy or investors fancy, and stock go up like crazy. And once they go up like crazy, they just fall apart. And sometimes, like, it is not logical also why this stock is making such a move. Like, I was watching this Jinko Solar, and there's a friend of mine. Ultimately, he's right, but he's yet to make profit on his chart. Okay, uh, because he said like, there is no logic why this thing is going up, going up, going up. So because of him, also I was watching this stock. So once I saw this day when I saw little bit of weakness, I shorted that stock and made money. But means logically, I cannot explain why this stock went up 243% in 22 bars. There is no, uh, it's like I don't see anything in its earnings or anything to justify that kind of a move, right? But when market gets going, markets move based on emotions. Markets don't move based on valuations. Market don't move based on uh, logic, right? And a market move based on just hot air, as that excellent movie seen in. So the stocks go on something which like, and it doesn't, it's just something which is beyond logic, right? And why will this stock go up? But then that's when you start like, planning your trade. You look, and I was watching, and I was having dialogue with this like, a person who was having so much losses. So I kept telling him, look, and the best one would be to wait for some sort of a signal and then short it, right? And if he had listened, he would have made so much money. He's still waiting for his position to turn profitable, right? So anything which goes crazy like this, in fact, and this is the thing which you should like, and put it in your book as to the kind of setup which is strong structure, and when it collapses, see how quickly it made. And still this didn't collapse as much as I thought it would collapse. So think about it, look, and these are the stocks which you need to look at basically, which have the crazy kind of like a momentum. And whenever there's a crazy momentum, what's going to happen to a stock with a crazy momentum? It's going to have a mean reversion. That's the fancy word, right? And whenever there are like stocks which are making crazy moves, ultimately the craziness doesn't last long, and then the whole thing collapses. And when it collapses so spectacularly that there is a lot of money in it. So strong structure shorts is very nice setup, extremely good setup. Okay, happens all the time. What happened to all my this thing? I don't know why this page is posted. So strongest stocks make the best shots. Okay. And it's not only the story stocks makes the best shot. Even stocks with real earnings, okay, which have a track record of long track record of good earnings, ultimately make good shots, because everything ultimately just cannot sustain that kind of a growth rate, right? So that is why a stock, when it makes to IBD 50, okay, it is a stock which is likely to just reach its peak in terms of earning potential, in terms of like making, because everything which they are using for scanning is based on backward looking history, right? When you are saying that EPS rating is based on basically uh, taking a moving average of last 6 quarters of earnings, and last 3 years and 5 years of earnings, and giving it as a weightage and all, then at what stage will a stock have a 99 EPS rating? When do you think a stock is going to have a 99 EPS rating? at its peak, right? Because when it has basically what they are saying or what they are calculating is, they are calculating the way they are calculating that EPS rating is, they take last 2 quarters of EPS, okay, 6 quarters of EPS, and then 3 years and 5 years, okay, and it's weighted with more weightage given to the recent quarter. So recent quarter might get, like, say, this might get 40% weightage, this might get all the three, rest of the three gets like in a 20% weightage. So you're taking a weighted average of that, and you're ranking every stock based on that. So when a stock has a EPS rating of 99, what it means is it had a good 5 years earnings track record, it had good 3 years earning track record, it had good 6 quarters track record, and it had very good last 2 quarters track record. So what is likely to happen to that company if it has peaked in terms of earnings? What is the next thing which is likely to happen to that company is that it is, there will be a slowdown, because nothing keeps going up forever, right? And there is a practical reality. If it was such a profitable business, why wouldn't other people enter that segment and things and like that, right? So as a result, what happens is, that's the time when it is most vulnerable to a negative surprise and collapses. So keep this in mind when you're looking at anything like, basically. So strong structure charts can work on any stock which has made a crazy move. Okay, and it can work. Strong structure stock can work like, the whole concept of strong structure. You can like look at a stock which has made like a crazy amount of move in 10 days. Okay, or 20 days or 60 days. Okay, it is likely that the stock is going to have a deep correction or correction which might be very profitable. And what is the beauty of this kind of a setup? The beauty of this kind of a setup is it's very easy to isolate these stocks, right? Okay, look, this stock is likely, this is the stock which is likely to the one which is going to collapse, right? When you see in last 10 or 20 days, it makes like continuously positive moves. What is likely to be the next move for that particular stock? You can anticipate, right? You can anticipate, okay, look, this thing is going parabolic, or this thing is making crazy back to back 20 days, it is going back to back every day. What is likely to happen? So you're just waiting for the first sign of weakness, and then you take a shot, right? So in order to find charts, you cannot use the same thinking as what you use when you're looking at finding bullish setups, right? Whenever you're looking at bullish setups, you look at momentum and all, but here you have to use the momentum other way. So always look for the very strong stocks. Those are the stocks which are basically likely to be the best stocks to short. There is another place where you can find these stocks. Where can you find these stocks? Every day you can find these stocks very easily. If you do the study, which I recommended multiple times, of study 20% plus, what do you think happens to these stocks after their 20% move? They all fade. They all fade their strength. They all fade, right? And that's the mean reversion. That's the mean reversion, right? So mean reversion, which is a very strong this thing tendency of the stocks on a short time frame. works in your favor if you do something like that. Strong structure stocks, you short something which is strong structure. Okay, so it is either you look at top 25 or you look at anything like that, and that is what is. And now there is a, especially if you are a mechanical trader. Mechanical means like, you use some sort of a back testing and do uh, based on like, you're like MHP or something like that. Then what happens is these kind of uh, systems which chart strong stocks, they test very well. They test very well. And that is why you'll see that, look at most of these people who are basically doing mechanical trading, one of the systems which they will be always be trading is mechanical system, which will be looking at very strong stocks to short. Now, obviously, without getting into what they actually do and all, or what are the problems of what they do, one of the problems is in their case is like, look at a because they don't wait for a signal to time their entry. What can happen is on a stock like Jinko Solar, okay, they can get big drawdowns because on that individual trade, because if it just doesn't like, their signal keeps saying, oh, this is a short here, and it keeps saying it is a short here, so they don't wait for a signal. Because they don't wait for a signal, they're like, just based on their testing, they do shorting. Sometimes like, stocks go crazy after they short it, and they can have a lot of problems. But if you can understand their way of trading, and then use incorporate that into your trading and wait for some sort of a signal or intraday signal or something, then you should be able to do this very successfully. Okay, and so that's one setup which works very well, which is strong structure. Now, this happens in all market condition. Okay, in any market condition, you'll still get strong structure charts. Okay, very nice setup to develop. Even if you're looking for position trading, if you're looking to trade position trading on a short side, then obviously look for story stocks that have gone up a lot, right? 100% plus, and then short. Now, what are the practical problems of this strategy? There are practical problems of this strategy. And what are those practical problems? There is one practical problem which you are going to encounter in many times when you're trying to do this. Like, say, I was trying to short, I was convinced that this thing is going to collapse. Okay, yes, I had no doubt about it. But there's no stock to short. Finding shares to short. Fi- See, when you're going long, you don't have this problem. There is never a problem of like basically not finding shares to buy, right? You just have to pay up more. But finding shares to short is a big problem when you're trying to do shorting. Okay, say like, if you're trying to short um, that particular stock, or there was a stock which was a crazy story stock which made a crazy move this year, right? Here, 3000%. And was there any doubt that this was like all fugazi kind of a thing? So you have to then, if you want to find charts, then what you have to find is you have to find a broker, okay, who can locate the charts for you and probably pre-borrow those charts, things like that. So for that, basically, you need to go and go to brokers like Centerpoint, which is very well known, right? And I think there are a bunch of them. Besides Centerpoint, also there is some other broker, but Centerpoint is the one which is the big daddy, right? Or buy puts, but always like this is the problem which you are going to have on some of these strong structure kind of charts, because they'll be like almost impossible to find charts on them. Okay, but ultimately all of them collapse. Okay, even some of the stocks which are real business, same thing happens when they go parabolic. But it's not the easiest setup, so in execution term, because sometimes you cannot find those stocks, right? multiple times this stock went up crazy, okay, went up 300% in a short period of time. What happened after that? Collapsed 60-70%. Okay, again it went up and then it collapsed. Okay, 54%. But finding shorts was so difficult in the stock also. Now it's not so difficult because there's been secondaries and things like that, right? Every time it makes a crazy move. Okay, that's not as crazy, but like, it still collapses. So look at the practical problem of like, and if you want to like short these kind of things, I would say that you need to open an account with center point kind of a thing. Yeah, sometimes like, if they're like completely unknown kind of stocks, and that's what happens with these story stocks, like, there may not be options on them, and the things happen so fast, like in 3 or 4 days they'll make some crazy move, and by the time the option market can introduce options, sometimes like, it's not always, but sometimes, right? So that's one. So this is one setup, and the thing which you have to be important, which is important, is like, whenever you're trading this, is remember that look, uh, your exit also matters on this. Okay, don't try and like, okay, they're going to like, crash, and so the it takes time for the crash to happen also, right? And then there are these counter trend rallies. So unless you have like a real conviction that this is going to crash to zero or something, you have to tactically take profit, and then wait for another counter trend move, again reshort kind of a thing. So keep that in mind also. Okay, so that's one setup. But there is another setup on the short side, and which is very beautiful setup, and which is also works. See, it took me a lot of year to find ideas for long and for short setups which will work in any market condition, because that's very important. Otherwise, like, yeah, when the market goes down, shorts are going to work, but then like, market doesn't go down often, right? And so the other setup which works very well is weak structure. And what is weak structure? And weak structure and strong structure, both these setups work very well, even if you're a day trader. And in fact, a strong structure chart is such a beautiful setup for day trading, because anything which comes out of the gate very strong, what tends to happen to anything which comes out of the gate very strong? Most of the time it fades, right? It pulls back, and that pullback can be like almost 25-30% of the move. So if the stock went up $10, you will find a pullback which will be $3-4 or $3 kind of a pullback. So it's a very nice setup to develop, whether you're doing long short-term trading, swing trading, or whether you're doing day trading. The same thing works on all time frames, right? Weak structure. What is weak structure? Weak structure is a stock which is down 3 days plus back to back. That means like, you're looking at back to back continuous days, right? And you're looking for day after day after day the stock being down, right? And then it has a minor bounce of less than 3 days, or it just consolidates for 3 days. Okay, and then you short it when that particular consolidation or things like that fails. So let's look at Snap today on an intraday time frame. Here, stock is very weak, right? And then there is this minor bounce, and I was watching this stock because I had it long, and then like, and I closed, and then I was watching, and on a lower time frame, and here is where I went short. Okay. So look for a setups like these where like, you get a waterfall decline, continuous decline. See, there was like, there was some positive bars here, but they're hardly positive. They were like, and there was this was like in a very weak stock, okay, and then it just barely manages to rally a little bit, and then immediately it just collapses. Okay, here look at Adobe. Okay, and then there's this one minor hesitation kind of a thing, and then this happened, and then $5. Okay, means in fact, and today is one of those days where like you couldn't go wrong. And this is where the thing which I discussed in the morning is very important, because when I was looking at morning exercise and doing my visualization and all, I was looking at look, and it's like, and I saying look, and I'm going to be playing a right-handed player, or am I going to play a left-handed player? Am I going to play a player who's got a big service, or I'm going to play a player who always returns, or things like that, right? So my thinking was look, and today will be one of those days where like the things will keep selling off. And because I had thought through that, I was consciously looking for weak structure charts. And if you run 3 by 300 or whichever scan you ran today, they're just like uh, even if you look at that Google for that matter, they're like in a weak structure charts galore today, because it was just like in one of those days where like everything was just like in a selling up in Shopify. Look at such a nice thing, right? And it sells off 4 candles in a row. It's down, and you get a thing like this. And here, as soon as you see a weakness, and see, it just kept going down. Okay, means Google opened and just kept selling off, and then one candle, and then it just sold off. Okay, kid in candy store kind of a scenario. TTD just kept selling off, right? And minor bounces, the bounce failed. Here you shot this, and it just kept going down. And you can like it's like there are at least 50 examples you can find today, because that was the trade for today. And that's what like basically you're looking for, right? And you're looking for a very weak kind of a stock. Ideally, I always like to look for like this became a 4 candle consolidation. That's not what I like. I like typically the kind of stocks which I like uh, is these kind of stocks where like the consolidation is just one can, or like the counter trend move, and immediately it starts failing. uh, but like in order to trade this successfully, you need to have that pattern embedded in your head, right? And you can't be asking, oh, is it a weak structure or not? It doesn't work, especially if you're going to be doing it. So look for these kind of patterns. Okay, look for this. Like this is an ideal example of what to look for. Look at a one and immediately starts like as soon as I saw it started fading, bang, go. Okay, and very nice. And today this was like one of the trades which I had thought through in the morning itself, saying, look, what is likely to happen is that the market is going to keep on selling. So what is the setup then I need to look at? Here, Spotify, where do you see a weak structure short? See that Tesla, I didn't take Tesla because like Tesla was not something which I was looking at that time. But here there was a consolidation which became a 4 candle, right? This became a 4 candle. Now that is no more a weak structure. What is the definition of weak structure? Where was Tesla a good weak structure short like here, right? And after this here, okay? Because that was only 2 candles. What is weak structure? Weak structure is a stock has to be down day one, day two, okay, day three, and these are all negative candles, and then it just like and it does for less than 3 days. Okay, at the moment it goes beyond 3 days, it's not a good setup. Ideal setup is like in just one day. Okay, that's the most ideal setup. I would take 2 days also, and this bounce should not be like major bounce. So you don't want to be seeing a major bounce like say if you're looking at intraday kind of a thing, you don't want to be looking at a major bounce kind of a thing. And then you just see that there is a weakness developing, and you go and short, right? We have to study hundreds of examples of this for to be like looking at like the moment you see this, then okay, look, there is like that's a weak structure, and then you just shut. Okay. Uh, where do you wait till the candle is formed? No, not necessary, not at all. On a day like today, I'm like, and I came in with such a aggressive this thing, thinking they saying that yesterday's bounce is not going to be like yesterday's bounce was just a fake thing, and today it is going to go, like if it goes, it's going to go a lot, right? And so I was just in a very aggressive mood, so I was not waiting for confirmation. Most of the time, if you're going to be waiting for confirmation, I think it might be better that you don't even try doing day trading or some of these things, right? And if your whole life script is about confirmation, then uh, maybe you're not cut out for doing this then, because you're looking for sure confirmation and all, while you have to react while the things are forming. Okay, how do you know that it is like an essay? Whenever, if you're, especially when you're looking at in not on a like an essay here, this is another example of, like, say 3 or 4 days in a row the market is down, right? And 4 days in a row, and you get this thing, and then it fails here, so this is very shorted, right? And you'll find several examples of this on currently, because the stocks have sold off majorly, right? And most of the stocks have sold off with the the days, last couple of days. So if you look at it, okay, if the stock bounces back, like if you're looking at, say, on a daily time frame, if the bounce is less than 2%, 3%, that's like, and then that's a minor one. If it becomes 4%, then I don't like that particular thing. Okay. Then I'm not going to focus on that. I'm looking for something which even has a trouble, even having that much amount of bounce, is what really I'm looking at, right? And I say here, like, this is a good example of Fastly, right? And people were like trying to buy this stock all the while, right? It didn't even bounce at all. That's the best kind of a setup where it doesn't even manage to bounce. At best, it had a consolidation which went sideways, right? So that's the kind of stock which you want to see. Like, and I say, DraftKings is a very good example of a weak structure. Here, stock is down in a row. It barely manages to bounce back, right? Uh, this is a weak structure shot. Again, barely manages to bounce back for 2 days, and weak structure. Okay. I'm not waiting for a low of that day. Like, I'm not waiting for a low of the day. I just want to see, because this is again like, you're looking at, like, all the time you're looking at these kind of stocks, right? And so you don't wait for this to be taken out to short. Means if that is your life script, or like more likely if that is your life script, then you're a firm believer in a theory called support and resistance, right? In that case, your stops will be wider. So you're looking for confirmation, which I don't look for. That Tesla was like in a 4 candles. That's no more weak structure. I want like in a less than 3 days, basically. Ideal ones are where like in a, yeah, 1 or 2 candle consolidation should have low volume. Okay. This is a stock which you should put it like, this is the kind of stock which you should like study and study. That is what deep this thing is, like such a beautiful example of like basically weak structure. Like there's no buyer, there are no buyers. See, you have to understand, why does this thing happen like this? Like, always understand, just don't blindly go and do things. Why do you think, what is the reason why this weak structure develops?
No more buyers.
It's not only no more buyers. Whoever is holding this stock, or whoever, there are
Dumping.
continuous sellers. There are continuous sellers, right? There are continuous sellers. There is a strong continuous selling pressure, and that is why the weak structure as a setup is some, for whatever reason, whoever is selling, they just keep selling, they just keep selling, right? And here beyond meat is a good example of this weak structure currently. Unfortunately, it didn't offer you an opportunity to even get into this setup, but whoever is selling day in day out, they're coming and they just keep selling, right? And why do you think this move is like this? Okay, whoever, whatever institution or whoever is, he just doesn't care, right? They just keep hitting, selling, selling. Their only thing is wake up in the morning, start selling. Wake up in the morning, start selling. So supply is overwhelming demand, exactly. And wherever like somebody, and sometimes like people a lot of these people were trying to play fastly, right? And they, why were they trying to play fastly? Because of fast move, right? And so the people are trying to buy, but there is not enough buying because the seller just keeps selling, right? So that's what happens. So like, and here, look at this sun run also now. It's like in a weak structure. After that move, just somebody keeps just selling, right? And that's what you want to exploit, right? Here, MTH, right? Look at it. 1, 2, 3, 4, 5 candles down. You get a bounce, right? That was like a little bit bigger bounce than I like. And then like, so why is this weak structure developing? And that's important to know because somebody is selling. He doesn't care. And obviously, most of the time, these are bigger players selling, right? And I look at this, another very good example of weak structure. And that is why I like, whenever I like look at weak structure, I always like the one candle kind of consolidation kind of thing, because they are the weakest, right? Means the one candle is the best because they are the weakest. And see, 4 candles in a row, the stock is down. And here what happens is one bounce, and then again the seller shows up. Okay, so keep that in mind. You look at study this, like, and if you want to, and the beauty of this is if you spend this weekend studying this and develop this as a setup, okay, you'll be able to make money as a day trader, because on any given day you will find like there'll be like hundreds of good weak structure short setups every any given day. Okay, and if you prioritize based on 3 by 300, or if you prioritize based on that H minus L scan, you'll find some 5 to 10 good ideas of weak structure on any given day. Okay, and not only that, even if you don't do it as a day trade, if you do it as a swing trade, they always happen. They always happen. There is always weak structure in the market. Okay, they may not offer you a lot of money in terms of like a move in terms of like in a percentage, but they're high probability setup. I like one thing which I like about this setup is it's an extremely high probability short setup. Okay, so that's one of the reason why you'll see this setup works so well, because whoever is selling now, Dexcom, like 4 days in a row, they're selling. And if there is a minor bounce and if it starts failing, you got like, and you look at this Aerojet, rocket dyne holding kind of a thing. And the best weak structure setups are always stocks which had gone up a little bit or something, right? And then like, and they see here like in a 2 days, and then like, so no, somebody is just selling. Somebody is just selling. Okay, we don't need to know who is that person, but continuous selling, and that is why it is called weak. This is another example of weak structure, right? No respite. So look for these kind of patterns. It's a very high probability setup, and see here 3 days. Like this was like, there was no positive day, almost like I want to see like, and there's only one positive day in this particular move where the stock went down like basically 19-20%, right? For 4, 5, 6 days in a row almost. And then this barely managed to bounce. And this is the day when it was like, and basically is when that was a short here. So if you want to make money using this setup, And you can see also this setup is developing as a weak structure, right? Probably it was also a weak structure earlier also, because 4 candles in a row going down kind of a thing, right? So, and I'd prefer weak structure charts on stocks which have not had gaps. So it's much better to find something which is like this, where there is no gap, and then just now it is a gap, but like, it was a continuous selling without gaps. Means there are gaps, but there are minor gaps kind of thing, as against Intel kind of a thing. And study this. If you study this, you'll find that this phenomena happens how many times in a year? How
Every
many
day.
times do you think weak structure kind of a thing must be happening in a year?
Every day.
No, but from a swing trade, obviously day trade, so like it happens a million times in a year kind of a thing. But from a swing trading point of view, how many setups do you think you will be able to find if you focus on these setups? On a swing trade basis, in a year, you'll find anywhere from 1,000 to 5,000 setups like this. Okay, especially when, and these weak structure charts happen on many time, I mean, it's like they happen on strong stocks, they also happen on weak stocks. And if you look at, like, say, let's take, say, the universe, and if you take the universe and go and look at YTD, which is almost like now a 10-month period, right? Or a 10, or 10 months period. And if you look at the stocks which have gone down a lot, okay, how do they go down? 1, 2, 3, 4 days in a row, stock is down. There's 1 day bounce. Somebody like starts bottom feeding, or somebody, again weak structure. 2 days, weak structure. So if you look at, like, in almost every stock which goes down a lot, you will see series of weak structure setups on them. Like here, Calogen Petroleum Company. What do you see? Continuously down, little bit bounce, like bounce, goes down, one bounce day, goes down, little bit 2 days bounce, goes down, so little bit bounce, goes down. So if you keep looking at, like, even the stocks with a negative trend intensity, or the one which are down a lot, you will see a lot of like weak structure, because that's the way. When a stock is going down, it will continuously, because somebody is selling this stock, right? And somebody is just liquidating this stock, and you'll see that weak structure after weak structure after weak structure, it just doesn't bounce, right? Just doesn't bounce. And that's what it tells you, that this is so heavy, or like the sellers are so overwhelming selling is there in this, that they don't care. It just doesn't have. It's like no amount of Viagra is going to help that stock kind of a situation. And you'll find this again and again and again. Means, like, if you go and look, study all these stocks which are down a lot, and mark all the weak structure setups on that, you'll see again and again and again the same thing happens. That, like, the stock just keeps on like getting sold like that. And see here, somebody just wants to get out of this stock, right? Since I don't play this very low price, but there's no harm in playing this low price also as a shorts. Okay, they just see 3 days in a row, just one attempt of bounce, and here, and then the stock keeps going down. So you can make a living trading weak structure shorts. Okay. There are so many opportunities in this. You'll find, like, you have to study this. You have to study this to understand. And there is another good thing about this setup. And what is the good thing about this setup? The good thing about this setup is that you can anticipate this, right? Yes, the risk is low also. That is also one of the things. But, like, you can anticipate, because you're looking at, like, say, if you go through, obviously, in order to do this, what will you have to do? If you really want to do this kind of a thing, and like, and anticipate these setups, what you'll have to do is you'll have to do things similar to what we do as ants plus plus kind of a methodology. On what stocks will you need to do this on a ants plus plus kind of a methodology? Weakest stock means like in terms of like say TI 65 is below 0.95, right? Or stocks which are weak by MDT. And those are the stocks which you will again and again see the same thing. You'll see like same thing. If you like look at like say you sort it by MDT and look at the stocks which are very low, uh, uh, or you can like look at the bottom 100 stocks or bottom 300 stocks or bottom 400 stocks. You'll see again and again the same thing, which is like they will have weak structure shorts. That is the only way in which stocks sell off. See, you will see weak structure, right? Weak structure, and so many times. And so that's one thing you can anticipate. There are other things. One is that tell me anywhere else on the internet or in books or anywhere you a description of a setup like this. Have you heard of a description of a setup like this in any of the books on trading or anything? So this is a unique setup, right? Unique setup, which is not some most of the people even don't think like that, or they are not even aware of, okay, look, and this is something. So that means you are in a virgin territory. There's no competition. Okay. So this is a very nice setup, like the completely like, and you'll see so many of them, so many of them. So if you are like, if you see something like this, and you are doing your work, the moment you see something like this, what should be happening is you are salivating, right? Because that's such a weak structure chart, right? And you enter on this particular thing, and once you enter, it just keeps going down, right? Just keeps going down. And see, we look at like anything which has gone down a lot in last 6 months or in 3 months and all, and you'll see series of weak structure charts, series of weak structure charts, and that's how the market always goes down. So see here, 4 days in a row, stock is down. Minor bounce like in hardly 3 days, less than 3 days, right? This is the day where you short. And if you're shorting, where will you put your stop on this particular stock if you're shorting it here?
High of the day.
High of the day. And then let it run. Typically, again, you'll find that they run for 3-4 days and then they like have a counter trend bounce. If the counter trend bounce is not like major, then you just keep holding. You keep holding uh, till like there is a counter trend bounce. And if you get a counter trend bounce more than 4% or something, then you just close, or like once you are in a profit, you do trailing. And this setup works so well. And it's a very high probability setup. See here. Uh, this is not like really weak structure because the consolidation was 5 to 6 days. You want like consolidation, which is like just 1 day consol. My ideal situation always I look for is like 1 day kind of a consolidation, because that's the best. That means the stock is so weak that it's like a patient who just for 1 day managed to eat something and feel that case, but then like his situation deteriorates. Like this is an example of that, right? And the 3 days down, 1 day, and now this is deteriorating, right? But look at it, the liquidity is not there. So if you can do a study of this, do a deep dive, okay? Study 200, 300, 400, 500, 1000, 5000, 10,000, 15,000, 20,000, 50,000 past example of this. Then what will happen is that You will have deep understanding of you don't need to ask NASA to like tell you what is there on the dark side of the moon, right? So how do we calculate how much it costs to borrow using fee rate, rebate rate, and is it a daily rate? It's a daily rate basically. The way it operates is daily. Daily they will take a haircut from you. Here is what I do. Okay, when you are getting into that kind of a thing, you are typically looking at a strong structure kind of a thing. Okay, so because I've realized that look, I don't want to get into the business of going to center point and doing this and all kind of a thing. What I do on strong structure short is I only try and short strong structure short with a very high liquidity of like say 5 million kind of a thing. Okay. And if it is not available for borrow in IB, I don't even go and try and short it. That's my approach because to me, yes, I know there might be a lot of money in it, but I'm not really dying to get money because I have so many other things which work for me, right? So I just look at like for strong structure, but for the weak structure, you don't need center point, you don't need anything. Okay, most of the time, I have never seen a weak structure shot which I'm trying to take that IB doesn't have a bar on this. So this is like basically the easiest way to find money on the short side, and I like weak structure for that reason because everybody is trying to short the strongest stocks, or they are like saying this stock is going to go down and all. Nobody is paying attention to this kind of a thing, right? And you see a setup like this, how many are paying attention to this, or how many people even know something like a weak structure short as a setup, or they are actually trying to scan for this or trying to look at it. Mm, unless they are Stockbee members, I have not come across anybody who's even talking like this. You can directly take a, yeah, you can like basically save this particular thing. You can save this chart. You can save this chart directly. So why do you need outside software if you want to save? You can just save from there also. What I use is I use software called uh, what is it called? Snagit. I use Snagit. I think it costs $30 or something. I mean, it's like this is so old. Like I have not updated that software for many years. So I bought it many years ago. Some 4 or 5 license for I think $40 or something, and it's good because the advantage of that is like once I capture that, I can like mark things. Think okay, so here I can mark like this was a weak structure, write notes and things like that. So that's why I use it, and it allows me to do things, other things also. I can capture a scrolling window, things like that. That's last of your worry. That should be last of your worry. Your worry should be, okay, here is a unique setup which is not in public domain, largely not in. I'm sure, like, and I'm not the only one who discovered it. I'm sure the quant funds and the renaissance of the world must have figured this out also, right? They are much smarter than they are at least 1 million times more smarter than me, so they would have figured this out. But uh, this is the easiest setup. This, nobody is trying this. Nobody even pays attention to this setup, and there are so many stocks which are like whatever reason they are doomed, right? And they just keep selling every day, and they offer you so many opportunities to short sell, and that's where you go. So any questions? And especially if you're a day trader, definitely develop this, because what happens is there are so many stocks which go down a lot. Even on a positive day, a stock which is up can also go down, right? Whenever it goes down, it is more than likely that it will be having a weak structure, especially when you get, say, weak structure shorts. Okay. So it's weak structure many times. You will see, especially when the stock. And here is a s- small little tip which I will give you if you want to find weak structure on an intraday basis. Whenever you're going through the scan, okay, if you want to find a weak structure short, okay, don't select a stock which has a week like this. Okay, you select a stock which is closing near the low. Like if I want to find a weak structure, I want to look at stock which is closing near its low, because that is where the weak structure is likely to be, right? And so if I look at something like this, it might have a weak structure, but obviously we are looking at around 1 p.m., so it's a different story. But always, whenever you're looking at weak structure, try and find a stock which is closing near its low. If it has a weak, then it has already bounced, right? And I say the Unity software might be, all of these have bounced back to in the morning. Whenever I look at it, I always look at the one which is closing near the low, because that is the one which is the weakest one, right? I have no idea. I don't use any of this Evernote and all this technology. I just use Google Drive to store everything. So I just put all my things into Google Drive. Basically, I'm not the right person to ask these questions. Okay. Whenever there is a sell-off, you are likely to find weak structure, and weak structure offers you such a low risk opportunity. Okay. Uh, this, as I've said this multiple times, I have a friend who likes shorting, and I told him multiple times, look, and why don't you use this as a setup? But then he doesn't it find manly. It's not a manly setup according to him. It's like there is no glory in finding something which is weak and then you go and kick it further, is how he thinks. Yeah, it's not macho enough. Basically, it's not like it's not a Texas setup. It's more like see here, weak structure shot, right? Excellent example of weak structure shot. Just one candle and like. But here is the thing: if you do a lot of work and this kind of a thing, and like do ants plus plus kind of a thing, then you're looking for here and you're waiting, and then you can get in much faster. And then he goes into things where like he will have 1 million loss on a short position and he still keeps holding and then keeps wiring money. And uh, that's not my game. As I explained in the morning, my game is to like find extremely low risk opportunity where free dollars are available and where nobody is looking, and go and pick up the free dollars, right? So in the past, I have shared some scan called weak structure short scan. I'm not recommending that scan because it doesn't find all of them. I just, whenever I need to find weak structure shorts, I basically do a manual kind of a exercise to find them, putting in some elbow grease, going into like stocks basically which are weak on a last 5 days, 10 days kind of a thing, rather than using a scan like this, because the scan has sometimes it's like if I apply a lot of my trial and error, then I will find a right way to do scan for this. But at the moment, you don't need a scan for this. You can just like basically, once you understand the concept, you can find this using and plus plus kind of a situation. Okay. So I'm not recommending this scan at all, even though I shared it some time back. It I'm not recommending because it's not really like, and it's not the best way to do it, kind of a thing. Like here, you have a very good example of potentially a weak structure short setting up, right? I mean, if it starts breaking, that's a weak structure short, right? So, okay. So, any questions here? I would say the easiest way, the way I do it, like whenever I'm looking for a weak structure kind of a thing, is just take the list of universe 30 plus. That's what is my primary consideration for looking at weak structure. Also, I don't really go into the low price, but I've been researching this and I don't mind going into the low priced also. So I just sorted by ROC and go through this and see if they have like, basically, so you can either do it by ROC or like you can even add a column here, which will be value column and price percent change 5 days or 5 day price trend versus market. Even if you add that and you see that the this is figure is low, then that is a weak stock, right? For last 5 days, because remember what you're looking for is 3 days down in a row, right? So then here, this is weak structure short, right? This was a weak structure short here. And whenever you're looking at 4% breakout or dollar breakout also, breakdown also, you're looking for the same thing, right? So for 3 days in a row, it is down, right? These are minor bounces, right? And here, okay. So I'm not a great fan of using TI-65 below. See, that is going to get you only the one which are going down. But if you want to really like look at every universe of stock which has gone down, I would just look for something which is like as simple a scan as just a simple scan you can build. Okay, saying depending on what price you want to play with. Okay, here is what I would do as a scan to find this. Okay, C by C5 is less than 0.92. Okay, because what are you looking for? You're looking for a stock which is down 3 days in a row, right? And you want the stock to be down, not just like so a stock which is down 8% plus in last 5 days, right? And liquidity, whatever is your liquidity. So whatever minimum liquidity you want liquidity of 100,000, then you put mean V 3.1 greater than 100,000. If you want 1 million, you can put it 1 million. So 1 mil, right? And whatever price you want, price C is greater than or equal to $3, right? So these two things, which is strong structure and weak structure, very nice, very nice short selling setup and work in any market conditions and can be anticipated. Can you comment when it can be a reversal? Some look like reversal versus weak structure. I'm not sure what that question is. So if I'm looking at something like this, to me it looks like a weak structure, right? But I'm not going to be like to you it looks like a reversal. I don't know why it looks like a reversal, but I'm not going to short it like unless I see a weakness on this, right? So I'm not sure what you're looking at. Okay, so I'm looking for like something which is like a say here this looks like a weak structure, right? Obviously it can become a reversal if it like goes up a lot, but what am I looking for to short? I'm looking for a short some sort of a range expansion here where the stock starts closing near going down, right? And so that's what I'm looking at basically, right? I don't see this as a weak structure. Yeah, I do see this as a weak structure, 3 days down, like, but it is gap down. I really like, I don't really, currently there are a lot of gap downs because the market is like that. What you want to see is like something which is so here, drop king, very nice. So that was the setup. ROP. So you show me an example of what you think ROP. That's like but like that's the kind of stock. If it breaks down, that's going to make a big move down, right? And basically, it's almost every stock looks like that currently. That's the problem. But yeah, that's a weak structure short. And even if you don't look at this part of the thing, if you just focus on stocks with a trend intensity about below 105, also you can find this weak structure. Especially on those kind of things, you'll find a lot of weak structures, right? And basically because something goes wrong or whatever reason. Typically, in my mind, okay, not typically in my mind, weak structure chart is footprints of the elephants, right? Means when does weak structure happen? When the elephants want to get out of something, right? Then they just keep selling, right? And in this case, like you see, like they're just selling, right? And they just keep selling. So stock is just getting sold, right? And for whatever reason, like typically happens because the something changed about the stock, like this PSX has been selling off, and it's kept on selling off so many times, right? And so something must have been drastically wrong with the business, right? So whoever is deciding, he just keeps on coming and selling off, right? It's not a question of election. It is a question of like say, why do you think this stock must have done this kind of a thing? There must be some reason which we don't know, right? But we don't need to know the reason. All that we need to know was that to short it here because it was a big structure short. Um, I try and find the first or second waterfall kind of a thing. I am not really keen on taking something which is overextended. Like if it makes, yeah, sometimes it works, but like the easy money is always to find the first one, which is like first or second one. Okay. Weak stocks. Even if you study ExxonMobil, like, and it is, see here, weak structure. Now, here is the thing, okay? And that's very important thing to understand also. If you believe God exists, okay, and He has given you the ability to ask questions, okay? And if you believe in God and He has given you an ability to ask questions, He's also given you an ability to answer those questions. And how can you answer this question? Yes. Do a deep dive and come back, and then let's talk, right? Let's do a deep dive, post it on the timeline, right? And then let's come and like, let's 90% of your question, 99% of them will be answered, right? But to answer that question, do I look for like if it is intraday, I always try and look at the first or second, like unless sometimes there is a stock which just for whatever reason keeps selling throughout the day, right? That might be one of the cases on that particular day. But typically you're looking at like basically uh, the lower risk money is in finding that setup first time. But here like okay, again like this stock continues to sell off, right? So this was a weak structure here again, like it tried to bounce back, nothing happened. So this is where you short it, right? So that's the thing basically, right? Bunch of these are like, and I see here like three candles in a row it goes down. This is, you may not make, means like the profitability per trade may not be such a high, but if you can find trades, okay, with like a very high success rate, and if the profitability is low, Does it matter in terms of the per trade profit? Even if it is low, does it really matter? No, right? And a sure money, like I would rather take sure money. I would like whenever I have done like these kind of trades, like on weak structure, seldom do I lose money on them, because it's like it's a setup which works so well. It is like just a setup which is like uh, the stock is so weak. It is so weak that the thing is just going to. It just doesn't have the ability to get up and start walking. Kind of a setup it is basically. So that's the thing. Okay. So gravity, yeah, whatever you want to call it. So that's a setup which you can put so in your set of quiver of arrows or whatever arrows you have. You can like have a bunch of things on the long side which work, some unique setups which you would not have heard of outside, right? And like ANA 3 and all, and you have short setups which are basically the best setups which you can work on, especially the weak structure kind of a thing. And even if you can't get into strong structure because you don't have the brokerage and you're fighting with other people who are trying to get into it, doesn't matter. There are thousands and thousands of opportunities in weak structure which nobody is even looking at, right? Means everybody wants to short this stock here, right? After a few months it starts collapsing and it will continue to keep on collapsing. Do you think that people are even paying attention to it? Because it's no more a macho game, it's no more a manly thing to do. So they're not even paying attention to it. And if there is free money there, don't we want free money there? Okay, any more questions on this? Yeah, any questions? I would ask your questions after you've done a deep dive. You do a deep dive. If you're a day trader, do it on an intraday basis. If you're like and let's then discuss this. The conversation will have more meanings. Okay. Okay. So there will be no 911 today, and I'll see you sometime next week, probably.